Hello and welcome to Asking for a Trend. I'm Myles Udland. U.S. stocks cratered as the Nasdaq entered a bear market and the Dow plunged 2,200 points. Here with the trading day's top takeaways is Yahoo Finance's Jared Blickery. Jared, give it to us here live from the floor of the New York Stock Exchange. Sloppy close, messy close, all kinds of superlatives across the board today.
Yes, lots of superlatives, lots of comparisons to 2020, and so that's why I'm calling my first takeaway the ghost of COVID. And if we go to the Wi-Fi Interactive, I'm going to show you the chart that I'm looking at here. Here's year-to-date S&P 500, and you can see how it just fell off a cliff right here. But if we take a look at the tenure chart, I want to draw a line from the pandemic lows in 2020 all the way through these lows, and we're right at this trend line here. But if we draw a line over here, this resistance, this potential resistance here is what stopped the market in 2021, and now it might act as support. However, we are not quite there yet. So I think we got a little ways to go. 4,800 is kind of my line in the sand for the S&P 500. Might bounce from here, but I talked to some traders and Monday is looking like prime time crash day if we don't get some kind of positive catalyst over the weekend. Not necessarily the base case, but it is definitely set up that way. So that's what we got to be thinking here. And again, 4,800 my number. 4,800 is my number. And then here is the Nasdaq. I just want to get to that real quickly because the Nasdaq is actually at that very same support line, and if I draw that here, you can see just reached that today. So Monday, I think we either bounce a bit and we say, all right, the worst is over for now, and then maybe we take another leg lower, or possibly we experience something reminiscent of 2020.
About how yesterday there was not a huge move in volatility market. Looking at what was happening with the VIX, that really changed today, and how did that change the character of this sell-off in your view?
Yeah, I'm really hot on the VIX right now. That leads to my second point, VIX schmix. I'm not sure what that means, but it seems appropriate because I don't know what anything means right now. But let me take a look at the VIX because the character lately has been a bit different than we've seen in recent times. Here is the year-to-date chart, and what you're going to see here is, let me just highlight what happened in March because we had a bit of a drawdown. It took about 2 weeks to get to that level, to get to the 30 level, and then it took another couple weeks to come back down. Usually it's the case that the VIX is taking the elevator up and then the elevator down. And this is evident if we take a look at the 6-month chart. We can see this is what happened around that nasty Fed meeting in December when Powell turned surprisingly hawkish. But that's not what we're looking at today. The VIX is much more comfortable camping out. And as Steve Sosnick reminds us, the VIX is not a fear gauge. It is a look at 30-day volatility in the S&P 500 options. It represents institutional hedging. The 30 days out, this is not a retail market, it is an institutional market. And what the VIX is saying is we are structurally pricing in more volatility. That is, we are pricing in structurally more volatility for the rest of the year. We can also see, let me just put a 10-year so we can see the COVID high, and we are not anything approaching that right now. Put some lines in there. However, we are inching closer, and so anything worse happens next week, we could see a higher VIX, but most likely due to the size of the VIX spike that we've seen, it probably comes down a bit, but not fast, and I don't expect to see sub 30 for a little bit of time here.
And let's just finally get out of here on some seasonality. And in a market like this, when everything is breaking, I don't think the historical comparisons are going to look awesome either.
That's right. Seasonality generally favors the bulls because stocks tend to go up, as you well know, Myles. So back to the Wi-Fi Interactive. Seasonality bucked is my headline. And right here, I've been tracking this since the beginning of the year. I have my market map for the VIX, and I had to adjust the scale because this almost looks like an error. That is what the VIX actually did. What we were expecting it to do, what it's done based on history, is kind of settle down into May. And then that would allow an April rally, a May rally, and then kind of ratchet up towards the end of the year. But this is an entirely different game here. And we can also see the S&P 500 market map. That has just fallen off. Here in blue is what has happened this year. Normally we would be heading up. April is a very bullish month, if not the most bullish, but instead we are doing the opposite. So the bottom line is when seasonality is bucked, when we don't have seasonality working in our favor, that means something bigger is afoot, and I think it's obvious what that is, but we should not be expecting 20% returns for this year, the third year in a row. That's the bottom line.
All right, Yahoo Finance's Jared Blickery leaving us with a little bit of an eerie feeling heading into this weekend. We'll check in with you on Monday morning. All right, well, a headline just coming across in the last few minutes. Bloomberg reporting the Trump administration will drop the Biden-era Medicare obesity drug coverage proposal. In late November, the Biden administration proposed a rule that would have made millions of Americans with obesity eligible to have popular weight loss drugs like Wegovy or Zepbound covered by Medicare or Medicaid. Now, according to Bloomberg, the Centers for Medicare and Medicaid Services could reconsider coverage of the drugs in the future, but HHS Secretary Robert Kennedy Jr. is an opponent of weight loss drugs, and shares of both Eli Lilly and Novo Nordisk are under pressure in after-hours trading. Not exactly the headlines those companies wanted to see after the week that we've seen in the markets overall. All right, well, coming up, we're going to hear from former Microsoft CEO Steve Ballmer as he discusses the kind of impacts he thinks tariffs will have on the tech industry. Stick around for that conversation and much more on the other side of this break.
We're here with former Microsoft CEO Steve Ballmer. Steve, thank you so much for joining us today. Really appreciate it. We're here for Microsoft's 50th anniversary celebration. I guess the first things first, what is it about Microsoft that allows a company like it to last 50 years?
Yeah, I think there were a few key things, and the company keeps doing them, and that's great. Number one, innovation. You have to innovate. Number two, you got to serve your customers well. Number three, you got to compete. You have to compete. And number four, you really have to have the people and the talent and the culture to persist. You have to have a long-term approach. That's part of the culture. You got to say, we're going to be here. We're willing to invest to be here. And starting with Bill, through me, and now under Satya Nadella's leadership, companies making the right moves with the right culture.
Well, speaking about under you, you helped Microsoft get into the cloud, and now it's a cloud juggernaut. What do you see going forward in that area, and then how does AI assist with that?
Yeah, I would say two things. Number one, computing and data are only going to get more important. And so the fundamental kind of engine that we built that had its antecedents, in the PC, in the server, and then it got taken to a place where it really could be expanded because you didn't have to do all this micro crafting of server setup to the cloud. Unbelievable. And that, even without AI, that would have been just going through the roof. AI is interesting to me because it's the first, quote, new thing, really, since I've been involved with computing, since the microprocessor and software. People say, well, what about the internet? No, it was an extension of what was going on, if you will, with networks. What about the cloud? That's moving things back out to a place where they're more accessible. AI, there's no historical antecedent. I can't point to something and say, you can trace that through to AI. Anything else, if I don't know what it is these days, I'll just say, what's it like from the past? Okay, check. There's nothing like AI. And so will AI help the rest? Yes. But is AI really a whole new thing? Yes.
I got to ask, we obviously have a lot of news around tariffs going on right now. What, in your position, say you're still CEO, what does that mean for a company like Microsoft?
Well, I may not answer the question exactly the way you'd want because I'm not still CEO.
Fair.
It means I don't have Satya's in a place where he has his hands on what's really going on. What are these governments thinking? What's really going on with these customers? So I'm not sure what I do. The advice, the thing I would say, is to make sure that you invest your way through the tumult which is today. Whether it's going to be down economy, whether it's going to be pressure from governments around the world. If you take a long-term view, don't worry so much about the short-term and short-term profits. Serve your customers well, serve the governments and cultures in which you serve well, you will come out the back end. The closest thing I had to deal with was the 2008 housing bubble. And it was bad. It was a really bad economic time. What did we do as a company? We kept the pedal to the metal. We didn't say revenue's down, let's stop investing. And so whatever it takes to innovate and serve customers, I would prioritize that. And certainly as a shareholder, That's what I would ask Satya for.
When you look at, we talk about AI again, the kind of strength that Microsoft has in that space, how does it continue to move forward? And how does AI, I guess, multiply what Microsoft is already doing? It's one of the leaders in the space. How does it continue to stay there?
Yeah, I think there's two things. Will there be a whole new set of products that get built? Yes. Does Microsoft have to be innovating and leading in those products, whether it's the chat product or other new things that are possible? Yes. And the basic value propositions that Microsoft has always offered. What is it like? What is the front end user experience like to computing? How do you change it? What is productivity? How do you enhance it? You mentioned the cloud and Microsoft Azure. How do you use AI to enhance, whether it's, or for developers like GitHub Copilot? But you also, as I said at the start, you got to be building those new applications, which are only possible today.
I want to ask more about your time at Microsoft. I guess, you had a successful run. What was your biggest achievement when you were CEO? What do you think is the one thing that stands out for you personally?
Yeah, I'd probably say, I'm going to say two things. You give
Go for it.
People forget the level of competition that Microsoft had, and still does, by the way. But it's easy to say, okay, the competitive set now is whatever, AWS, blah, blah, blah. We had a lot of competitors in the early 2000s. The company's not going to live another 50 years unless it is successful competitively through a combination of innovation and a variety of other tactics. We competed well, and that gave the company the resources to continue to thrive. And then the second thing I would say is the initiation into the cloud, whether it's what's now M365, Office 365, or Azure. It is now at a whole nother level, and I give Satya a whole lot of credit. But if he hadn't had any assets to build with, and by the way, he built some of them because he worked for me starting up Azure, so he's done a fantastic job. And it's a different business today. It's a different business. Even though we started the cloud, the complexity of building all these data centers and buying all this electricity, it blows my mind. And so I would say cloud and keeping us kind of afloat through severe competition.
Was there any category, of software or hardware that you wish you had gotten into at any particular time?
Yeah, I would say the most important thing that we didn't do well was to be in the business of helping somebody in their pocket. Phone, whatever that will become next, because I think the phone probably disappears into a set of wearables. That would be the thing I would point most to. The investments we made in search are really paying off now in the world of AI. But I think it's tough right now since so much of the time, in a sense, you can measure Microsoft's success in the percentage of minutes and the percentage of productivity people get from us. And there's a bit of a missing hole. We get a lot of productivity on those devices, but we don't get as much time on our software, if that makes any sense.
I just have one more question for you. Obviously Microsoft has large investments in OpenAI. Are there any other companies out there that you in particular are interested in that are doing something that's, on that level of complexity and interest?
On that level? No, not on that level. I mean, I'm a large shareholder in OpenAI because I'm a large shareholder in Microsoft. And Microsoft's I have no independent investment. So I'm glad to see the company's doing both the investment in that company as well as the independent innovation that it needs to do, which I think is fantastic. But it would be, if someone really said, is there another OpenAI coming in the next 3 or 4 years? I almost think that would be a silly question at this stage. I think the market's moved far enough that there's not one big new proposition. I told you AI's the new, it has no antecedents. It's going to be hard for somebody to come in and carve out that kind of a big position. Now, will OpenAI defend against some competitors? I don't know. You'd have to ask Satya that.
All right, Steve Ballmer, former Microsoft CEO, thank you so much.
All right, well, the vibes and the prices on Wall Street tanking this week after President Trump's aggressive tariff rollout sparked recession fears and pushed markets to the brink. The Nasdaq ended the week in bear market territory. The Dow dipped into correction. The S&P logged its worst 5-day stretch since 2020. Here to tell us all the cheery news and what economists and strategists have to say about it is Yahoo Finance senior reporter Alexandra Canal. So, I mean, where do we begin? How did folks work through this in real time, I guess, is really the question.
Well, first of all, I feel like I haven't even fully processed the magnitude of this week. Maybe it's because we've been in it, but this is history, baby. I mean, this is like pretty insane, the levels that we're seeing and really the reaction in markets that we've seen since Wednesday when these tariffs were first announced. But while talking with Wall Street strategists, economists, parsing through a lot of these notes, what really hits home is the uncertainty of it all and really the different scenarios that could play out here. You were talking to Joe Bruce-Wallace, RSM chief economist, earlier today, and he brought up what could happen if the EU retaliates. We saw that retaliation from China earlier today. They're slapping on 34% tariffs on us, matching what we did on the retaliatory side. And if the EU responds in a similar fashion, what could that mean? Not only on the tariff side, but also when you think about antitrust, when you think about big tech, what is the ripple effect there? And really the theme and the thread through here is that things could get a lot worse. So I want to play a little bit on what the top voices on Wall Street had to tell us this past week. Take a listen.
The reality is the issue of tariffs and its impact on the economy, it's going to take a while to sort it out.
Right now, it's a rather intense period. We do have the certainty of the announcement, but now there's the uncertainty about how is this possibly resolved and at what level do the tariffs eventually settle at. So we think that it's actually understandable why the market would react in a negative way for it to the announcement, but we don't think it necessarily needs to with the uncertainty.
We have these very large tariffs that are in place or are supposed to be put in place over the next week or two. But the president is talking about potentially rescinding at least part of them. How do you make a decision under those circumstances? You simply can't.
And to that point on the business side, earlier today we had a slew of reports that companies like StubHub, Klarna, fintech company Chime, ad tech company Mountain, they are delaying their respective IPOs. So we have this freeze in the IPO market, clearly a freeze on the corporate side when it comes to businesses. Consumers clearly don't know what to do. We've seen that in the sentiment data and the soft data. They've potentially been pulling back, and all of that is leading to a lot of this fear that maybe we're entering a recession or a period of stagflation.
Yeah, we had Ed Yardeni at the top of that clip, and he's among a growing number of folks on Wall Street who have now cut their price target. Yeah. Wall Street strategists cutting their price target.
He still is pretty bullish.
He had S&P 7,000, I believe was his initial call, but Lori Calvasina over at RBC, she's now at 5,500. The folks over at Capital Economics, they are now at 5,500 on the S&P, and of course we finished the week below those levels. So I think where things open on Monday, how we all start to recalibrate expectations for this year, how bears turn back into bulls, but it's bullish to be S&P 6,000 or whatever it is.
Right, and Yardeni to that point is at 6,100 right now. He did say it's too late to panic in the sense that you shouldn't have this knee-jerk reaction to stocks right now, that you should sort of wait and see how this all plays out because the tariff fallout, it's only going to continue in the days and the weeks ahead. I don't know if anyone has the answer.
Yeah, we saw the knee-jerk, no reason to jump on and be the last guy to make that decision. All right, Alexandra Canal, thanks so much.
Thank you.
All right, and that's a wrap on today's Asking for a Trend. Be sure to come back Monday at 4:30 p.m. Eastern for all the latest market-moving stories affecting your wallet. Have a great night and a great weekend.